Welcome back. Well, let's get talking about GST on insurance, GST on health insurance in particular, in this particular conversation. It's exempt from September 22nd, making policies 18% cheaper and more affordable. To discuss this and more, we have with us Satish Gidugu, who's the CEO of Medi joining in now. Satish, hi, welcome to the show. Well, just wanted to start with that because, the GST exemption has come in for individual policies, for family floater policies. It's not really come in for group policies. So what exactly would the impact be for a company such as yours?
No, thank you so much for having me here. Always a pleasure. So on the retail side, we are very excited, both as Medi and also as the Association of TPAs, that it was a significant and immediate, flip to improving the penetration or expansion of coverage. Clearly, I think one of the things that we obviously need to figure out is what portion of the exemption are the insurers able to pass on to the end members. On the group, historically, there's the 18% GST has been there and there's been no input tax credit. So that situation sort of continues. But we're beginning to see groups sort of creating hybrid products where there's a base product, which is a group product, but a lot of the add-ons sort of becoming, somewhat like retail. We think a lot more innovation and hybrid approach in group will come in, and hopefully we will, as the service providers, help employers navigate this hybrid model, right? Because it needs new network, new fraud mitigation measures, and so on.
Right, Satish. Good afternoon. Winnie joining in the conversation as well. Obviously, the centers also said and told insurers to pass on this benefit. But while obviously this means passing on the benefit to policyholders, there's a cost that comes in for insurers, right? So what will it mean for Medi Assist on that front, and what would be the increase over there in terms of cost for you?
So since we don't deal with premiums or the claim payouts, we only deal with the servicing aspects, and our yields are between 3 to 4% on the premiums, which have been fairly at the lowest end of remuneration worldwide compared to the overheads in servicing. So we don't see any impact from a premiums perspective on the servicing side. Of course, I think the reason I said what gets passed on is insurers lose some of the input tax credit. As a result, it's not going to be all 18% saving, and I think that's the piece that the insurers are discussing to understand what's the impact that can be saved from the members.
Okay, but overall, Satish, from your experience, do you think that there's going to be a surge in terms of demand, a surge in terms of volumes because of the GST rationalization on health insurance?
It will definitely help, because if you look at the medical inflation, that's been growing at 2x the general inflation, and significant amount of increase in premiums, especially for senior citizens and elderly part of our population. Clearly, there has been a little bit of a slowness in the growth, even in the retail, as you've seen in some of the numbers. We absolutely expect this to be a beneficial move to bridge that gap in coverage that we see today. I think the second piece I'm also hoping that will add to this is the supply side, where the GST exemptions have also either exempted GST on some categories, for example, on many of the life-saving drugs, or many of the medical equipment or consumables. The GST rates have significantly come down. So while we're still figuring out the numbers, I'm also hoping that the healthcare side, the supply side, also passes on these benefits, and one, brings down the cost for the members, and secondly, with the reduction in the premium, hopefully that will add us double the kicker for people to apply for more and more retail insurance.
Right. Also, just want to understand, for you in terms of financials or numbers, what is the possibility in terms for your margins? How do we see them moving after this change coming in as well?
We don't expect any change in
nothing
in the margins. It's not something that's relevant for us.
Okay. I just wanted to get a sense in terms of, the cost impact. Say, assuming there is a 5 to 7% increase in terms of cost for insurers, what is the impact that would be on your financials in terms of the cost sharing?
So typically, let's say we were at 100 rupees base premium, with tax it was 118. And even if we were to assume that there's a 5% increase, maybe 100 will go to 105, right? But the difference that you're talking about is 118 for a member going down to 105, right? And of course, our fee structure sort of depends on the final premium that the members actually pay. And the yields that we get are dependent on the product, right? There's some products which have high intensity workloads, have a slightly higher fee, but that's something that we have as a contract at a product level with various insurers.
Okay, all right, Satish. Run out of time, but I'm sure this is a conversation that we're going to revisit definitely as the GST rationalization does kick in. Thank you very much for joining in and speaking with us. So that is Medi Assist. But on that note, we need to wrap up on Halftime Report. Business Lunch up next.